Welcome this morning. My name is Scott Irwin, and my partner this morning is Todd Hubbs. We're from the Department of Agricultural and Consumer Economics here on the campus of the University of Illinois. And we're going to be presenting a webinar this morning entitled Implications of USDA Grain Stocks and Prospective Planting Reports for Corn and Soybeans. Certainly an exciting day yesterday, Todd. So just want to remind everybody that the downloads page at farmdoc you see on the screen, you can get our slides. It says available soon. Actually, due to our good work of our staff, they're available now. And our video will be available possibly later this afternoon. If not, it'll be available tomorrow. So that's how you can get the slides. The slides are also available within your GoToWebinar dashboard, so you can click in there and get our slides, and obviously that helps to follow along. Our format here will be Todd and I will be presenting for about 30 minutes, walking our way through our slides, and then we'll have about 30 minutes for Q&A. So please be submitting questions as they come up during our presentation, and then during the 30-minute Q&A, we'll get through as many of those as we can, and you can continue to submit questions during that Q&A time period as well. So that's kind of the administrative part. And so as we move forward through our presentation, Todd and I have split up the talk. I'm going to do the old crop information from the reports yesterday, and Todd's going to basically cover the new crop. So It's kind of a classic version of the bad cop, good cop presentation.
That's right.
And I get to be the bad cop by doing the old crop part of the presentation. So let's move ahead. Okay, let's talk about March 1st corn stocks and the quarterly grain stocks report that was released yesterday. Basically, the message was we have a lot of corn around.
A lot of corn.
A lot of corn. And the March 1st USDA estimate of the corn stocks in the United States on and off farm was 8.888 billion bushels. And you can see on this slide that that's the high for the last decade and higher than what the market expected. The average trade guess going into that report yesterday was 8.706 billion bushels. So it was not only high, it was higher than what the market expected. So want to hit the next one?
Yeah, click.
And so this is where we take the difference between those trade guesses and what the USDA actually released. And so we were stocks came out 182 million bushels more than what the market expected. So the blue on that chart basically means a bearish number. The red is bullish. And we had basically the implication is 182 million bushels less use in the second quarter of the marketing year than what the market expected. And that was a pretty large bearish usage surprise to the market. You can see it's the third largest since in the last decade, only rivaled by that big one in 2013. So that was definitely a large negative usage surprise in terms of what's going on in terms of our pace of usage for the old crop 17-18 crop year. So let's go to the next one. So we now have the first 6 months of implied usage based on that last quarterly stocks report. And for the first half of the 17-18 marketing year, we measured feed and residual use implied from that report at 3.725 billion bushels. And we could see that that's little over 80, that's right at 80 million less than a year ago. So it is a little bit of an interesting puzzle that we have continued growth in livestock numbers, yet our measured total usage and implied feed and residual use is just struggling to get above, much above 3.7 to 3.5 billion bushels in the first half of the year. So that's definitely something interesting that's going on. We certainly have larger supplies of DDGS, but it seems to imply some real improvement in feed efficiency out there.
I mean, it is it's a bit of a head scratcher to me. This number, when they finalize it, might be a little bit higher than 3.725, but I just can't fathom feeding less than last year with the size of the livestock.
Yeah, I'm the same way.
The distillers grains, they're not being produced at any higher level really than last year. I can't imagine we've gained that much feed efficiency in 1 year.
Yeah, I know.
So
I'm with you completely.
Now that number may be higher, but I expected it to be well above, 50 to 60 million bushels above last year with the herd size we're seeing. So
there's definitely a head scratcher going on in terms of old crop implied feed and residual use right now. So what we got to come up with a new projection based on the data point that we have.
Yep.
And basically, the way we take a look at this is we take that previous number for the first half as fixed. That's a given at this point. And then we say, what percentage of total marketing year feed and residual use does that represent? And you can take different assumptions on that percentage based on different analog years in the past. For many years, the first half feed and residual use previous to the grain boom represented about 64% of usage. Then it jumped to 68%. And then in some of the really high price years, it was 74%. And the last few years, it's run right at 70%. So if you take each of those as an assumption and then run them out for what they imply for implied 17-18 marketing year feed and residual use, you can get a big range, anywhere from roughly 5 to 5.8 billion bushels. Right. Where we come out is basically kind of split the difference of these different estimates and someplace around 5.4, 5.5 billion, which is a decline from the current USDA projection of 5.550 billion bushels. So that's where we come out. And let's go to the next slide. So we can take that and now plug that into our old crop 17-18 balance sheet. Supply stays the same. So you see, we're going to be dropping our assumption of feed and residual for 17-18 by 100 million bushels based on that stocks number that just came in. So losing 100 million bushels of demand base there. We're just slightly a little bit less optimistic on corn exports right now than the USDA. Their last WASDE was at 22.25. We think the data looks more like around 21.65, but recognize that there's still quite a bit of uncertainty at exactly where that final level of exports will end up. That gives us an ending stocks of 23.12 compared to the last USDA estimate of 21.27. Stocks to use ratio of 15.8%, and we leave the average price at 3.35 looking forward. So let's move on to soybeans. So you wouldn't know it, Todd, based on the market price movements yesterday, but the old crop information for soybeans was bearish too.
Yes, it was.
And the March 1 soybean stock number was 2107 versus the market's expectation of 2030. So we were 77 million bushels more stocks, which implies that much less implied usage. So there's that surprise number or difference between what the USDA reported for soybean stocks and what the market expected. And you could see that it was the largest bearish surprise in terms of implied usage of the last decade. We've had a lot of other numbers that are of a similar size. but it adds to the some degree to the implied lower implied usage in the current marketing year. So,
I'm sorry.
Yep. So, soybeans are interesting because we're looking at a much smaller category that includes the residual use. We look at that in corn and feed and residual use, and we look at it in terms of seed and residual use for soybeans. And you can see that the March 1 number indicates we were about the same for the first half of the year as last year. And this always is the case where the second half seed and residual use ends up being usually a pretty big negative number, but with a lot of variability. So as we look now going forward, as we look at the old crop soybean balance sheet, of course, the supply is not going to change. And we keep the seed and residual use for the year the same, given the information, despite the negative stock surprise, just because there's so much noise in these stocks and residual numbers for soybeans. We're going to keep that number the same, and we're going to just lower our export projection on soybeans a little bit compared to the USDA, down 15 million bushels, gives us a slight increase in stocks, ending stocks of 569 compared to 555 for the USDA, and we don't change much on the old crop. So even though nominally that was a bearish usage number, it didn't have as strong of implications, we think, for the old crop soybean balance sheet as the implied number for corn. That's right. So I'll end my bad cop routine, and I'll hand it off to you, Todd, to be the good cop and go through the new crop numbers.
Yeah, just as an addendum to this slide before we move on, that there's a real chance that export number will come down even more than we currently have it at. We've seen a waning off of sales. We tend to have a seasonal tick down in April as the Brazilian crop comes in, and we've not seen the strong export numbers that I would like to see. So I don't think we can crush our way out of a severe down thing in exports. So there is a chance that ending stocks number could grow by the time we see September. So keep that in mind. Principal crops planted. So the big shocker yesterday was the prospective plantings reports, particularly in three crops. To me, corn, well, I wasn't too surprised at the 88 million acres in corn. It still was pretty low. Soybeans, which was the real surprise, and spring wheat. Other spring wheat went up substantially. So overall, in principal crops, we're down 1.15 million acres, with large swaths of the corn belt reducing their principal crop acreage, which was a little bit of a surprise to me. I don't know about you, Sky, but it was.
Thing.
I didn't expect that, especially in the I states. I didn't expect that at all. And we see North Dakota up on that huge spring wheat number that they put out. Corn acreage came in at 88.026 million acres, which was, much lower than the trade guess of 89.4. And when we think about corn acreage, this is really setting up a projection for the 18-19 year, if this comes to pass, of the potential for really strong corn prices as we move forward at this low acreage number. It's the lowest we've seen in a while. When we go state to state on corn acreage, this is the Illinois number. Doesn't really surprise me. Indiana, not really. The Iowa number sort of caught me off. I thought maybe we would see some soybean acreage expansion in Iowa relative to corn, and in South Dakota. But overall, the downside on corn acres in most of the corn belt and out in the plain states, which maybe wasn't that surprising, 2.1 million acres down over last year. And, that's 2.4%. It really sets up nicely for corn prices moving into 18-19 with the kind of the consumption levels we're seeing moving forward. Over the last 20 years, the actual planted acres of corn relative to March intentions, they've been a little bit all over the place. The last couple of years, planted acres have gone up. As always, this depends on weather. Those of you in Illinois, You're probably thinking about building an ark right now. We've had so much moisture. The NOAA has put out a lot of moderate warnings about flooding in the lower Mississippi, along the Illinois, parts of the Missouri. The idea that this wet weather delayed planting in a lot of the southern part of the Corn Belt, as I'm sitting here right now looking forward, I would expect this not to be a too high an increase in corn acreage when we finally see the June acres report, based on the weather we're seeing currently and the prospects for flooding in a lot of areas. So it does depend on the weather and price, but there's a lot of variability in it. Right now, I don't see a high probability of a massive acreage increase in corn moving through 2018. This was the one that stunned a lot of people, including myself. I had to take a few minutes to believe it when the report came out. Soybean acreage came in at 88.98 million acres, well below the trade estimate of 91.05. I, along with a lot of other market observers, thought soybean acreage would expand over last year. It did not. And that 1.1 million less acres, I'm still wrapping my head around the numbers. I thought Illinois would expand soybean acreage. I mean, we were talking before the webinar started. I've been around Illinois a lot the last year. I was assured we were planting more soybean acres in Illinois, and we didn't, according to the survey. The reduced acreage in the western part of the Corn Belt, a little bit surprising to me, especially when you think about the prices we were seeing moving through February and March. There was profitability to be had in pricing soybeans, and the acreage just isn't there. You see higher acreage in Indiana and Wisconsin, but across the board, lower acreage in places except for maybe the Mid-South region, which expanded slightly. So where did all our corn and soybean acres go? Everybody keeps asking this. Well, it went into spring wheat, 1.6 million acres, 1 million of that in North Dakota. Some of it went into cotton. Cotton was up 858,000 acres. Sorghum was up 306,000 acres, and rice was up 227,000 acres. So some of it went into those alternative crops, but basically we just lost acreage.
Exactly.
We lost about 1.15 million acres.
I mean, I think you and I were trying to put that into perspective yesterday. Yes, we were trying to puzzle through this. And if you add up Minnesota and the 3 I states, lost in total on principal crops about 600,000 acres, which is not outside of the historical variation in these numbers. But to put that in perspective, that's about the area of corn and soybean acreage in Champaign County, Illinois. So it represents a lot of acres.
Yeah, we lost Champaign County basically. It's quite stunning. It was a shocker. When we look at the actual planted acres of soybeans versus March intentions over time, just like corn, they vary quite a bit. And we've seen some really large soybean acreage increases between the March Prospective Plantings Report and the June acreage report. The last couple of years, soybean acreage has expanded over the Prospective Plantings Report. And as I look forward to the weather we were talking about with corn, I think the probability of soybean acres getting larger as we move through this crop year is higher than corn acreage for sure. And you need to keep that in mind as we move forward with the wet weather. Could we see a large acreage expansion in soybeans? It's feasible. It's more feasible, I think, than dropping in acres as we move forward. And there. Oops, sorry. Clicked twice. So when we think moving forward, like how many acres are we going to have? Planted minus harvest acres of corn. Over the last few years, we've seen it between 7.2, 7.3 to 7.4. If you take an average over time, usually about 7.5 million acres of corn harvested for grain. And that's the number we use when we're projecting forward the difference between the planted acres and the harvested acres. When we think about production in 2018 on those acres, we're using a long run trend yield from 1960. Right now, our trend for 2018 adjusted is 171.4. Now, I know we've seen some really large yields in the last few years in corn, topped off with last year's 176.6, which was a bit of a surprise to a lot of people. But this year, I think the idea that we could do 171.4 is not beyond the realm of possibility, especially the way the weather may be setting up, but it really does come down to weather. So we're using that as our trend yield in 2018. So when we take this 88 million in planted acres and you take off move down to the harvest acres at 80.5 at a 171.4 yield, that's 13.8 billion bushels of production. We're carrying forward that 2.3 billion bushels for ending stocks, which puts total supply at 16.2 billion bushels, give or take, which is slightly lower, than USDA Outlook Forum's projections in February. I'm sure they will adjust these. Their yield trend is 174. I feel like that's a little bit too high for a yield trend for corn, but I could see where that number comes from.
Right. Basically, you get that number, interestingly enough, if you take the last 20 years and throw out 2012.
That's right.
That's how you get 174.
Right.
And so it comes down to what you believe about 2012 and whether you should include it in the data or not.
Yeah. Yeah, throwing out an outlier basically to get it.
Yeah.
So we're sticking with 174. So that puts us a little over 16 billion bushels of supply. Moving into 18-19, we're sort of sticking with the feed and residual at 5.45, where we've put it in 17-18. I think with the herd level we're at, you could see a regression in feed and residual use in 2018-19. I'm not convinced the 5.45 is going to be the final feed and residual number yet, so we're sort of fading that number a little bit. I'm pretty comfortable with 5.45 for 18-19 and feed and residual as we sort of maybe draw down the herd a little bit. When we look at ethanol use and other feed and seed and industrial uses, I have had that number at 5.63 for 18-19 for a couple months. I'm not much different from the Outlook Forum. It's based on what we see the EIA projecting gasoline consumption and maybe what our ethanol exports will be through 2018 into 2019. Thus far this year, we've seen excellent ethanol exports. Brazil, which placed a tariff rate quota on our export levels, they have still been importing at well over 2 times their tariff level, their quota level. And so if that continues to go along, we can see expansion in ethanol into 2018-19. The export levels, I've got it at 2.025 billion bushels in 18-19, slightly lower than this year, but higher than what USDA is projecting. You can't assume what is looking like a record corn export projection through the last half of this current marketing year and assume that's just going to completely disappear as we move into 18-19. It really is going to come down to what Brazil's second crop does, and they're getting plenty of moisture, but they have lost some acres there. And, how competitive our price is for corn in the world market. Right now, corn's the cheapest feed grain in the world, and we have it, and we're exporting it at a high rate. So that puts it at total consumption of 14.6 billion, which this is the most exciting part of this presentation for me. If our projections are correct, we're at 1.56 billion bushels, which puts us at a stock to use slightly above 10%, 10.7%, which sets an average price of $3.75 for corn in the 18-19 marketing year, with potential, with any kind of production issue in this year, of much higher corn prices as we move forward. We've seen a really nice consumption building over time, really strong corn market, and with this reduced acreage. Now, the key to that is that yield number, of course. It lowers our supply quite a bit, but I don't think it's beyond the pale. Planted minus harvested acres of soybeans, we're looking at 89 million acres of soybeans. Last few years, we've been a little bit above 600,000 acres of planted minus harvested acres. We sort of stick with that number, around 700,000 acres for our estimate. When we move forward on soybean yield, here we're using a quadratic. I know a lot of people don't like that as our fit for our yield change. Scott and Daryl and I have looked at this number a lot. This is sort of the growth of the Mid-South yield numbers. So for just a local short run projection, I think the quadratic is an accurate projection of where yields would be next year, and the trend is at 48.5. We'll see if those Mid-South yields tail off as we move forward. They've been growing at a rapid rate. So at that 48.5 with 88.3 harvested acres, when we look forward to 18-19, around 4.3 billion bushels of production. We carry out those ending stocks, which puts the supply at 4.877 billion bushels. Crush in 18-19, I'm projecting to expand about 30 million bushels. It could be more. There's more crush capacity coming online in the United States, especially out in the Western Corn Belt this fall. And with meal prices where they are right now, I think we could see crush grow. I'm not sure we could hit 2 billion, but you never know as we move forward. Exports, I'm a little bit lower than USDA's outlook for them. I feel like if we moderate prices in soybeans a little bit, we should have that export market there for soybeans, but they've been weak through 17-18 thus far. I don't think that'll continue into 18-19, but this is all contingent on any kind of trade war and disruption. I always say when I do these, my export numbers are based on where I think the numbers are going to be independent of trade issues. If we get into some kind of serious trade war with China, these numbers will suffer, and it could be significant. Seed and feed, we keep at 135, so it puts total consumption at 4.3 billion bushels. So basically, ending stocks in 18-19 down moderately from what we're projecting 17-18 at 552 million bushels, a stock to use of 12.8%, and we have a farm price slightly higher than what USDA is at 935. Here in Illinois, in the Eastern Corn Belt, that'll be much higher than what the national average price is. And it has been over the last couple of years because of a very weak basis out in the Western Corn Belt. Overall, the reports from yesterday, March 1st stocks for both corn and soybeans were much larger than expected. We've changed the forecast on feed and residual for corn and lowered it 100 million bushels. Corn acreage is down 2.1 million, with an increase in spring wheat acres of 1.6 and sorghum acres of 306,000, which has impact moving forward on feed grains across the United States in particular, even though we saw a higher level of wheat acres and a slightly increase in winter wheat acres. 1.2 million fewer soybean acres and 858,000 more cotton acres. All in all, we lost acres in 2018, according to the March Prospective Plantings Report. So moving forward on the balance sheet, we're expecting smaller corn and soybean crops in 2018, and we expect corn stocks to decline substantially and soybean stocks to decline modestly. And, the good news is we're expecting higher corn and soybean prices in 2018-19 than we've seen in 17-18. Do you have anything to add to that?
Well, I think that in reviewing the implications in total of the numbers yesterday, starting with soybeans, going before the report, if you were thinking of 91 to 92 million acres planted of soybeans, maybe even higher, wouldn't have totally shocked us. You could easily build a scenario where soybean ending stocks for the U.S. could have easily built above 600 million.
700 million.
There were all sorts of somewhat crazy numbers being thrown out there. And what I've learned, from this, if we still have to start with the USDA numbers, I lean towards the soybean planted acreage will probably grow as we go through the different estimates in the cycle for the 18-19 year. But unless we get a 2016 style soybean yield in the U.S., that what I call gargantuan ending stocks scenario for soybeans is not going to happen. And that's a big change in market perspective. That risk to me has been dramatically reduced. It's going to take a really huge USDA or US soybean crop to get us into that kind of really massive oversupply situation. So that's a big change in market mentality.
I agree. And when we were talking about it, to me, this basically the idea of sub $9 soybeans got removed from the table.
Yep.
And as we move forward, now 89 million acres is still not chump change in soybean acres. It's still a lot. And, I sort of see soybeans maybe getting in some kind of range bound as we move forward. We've got decent consumption, but not great. We're sort of foundering a little bit on exports, but we got a strong crush. And our production numbers have moderated. So I think we're coming to some kind of equilibrium where we're going to be bound a little bit.
But there is good news there.
No, there is.
We think the really low price scenarios outside of, producing a 51, 52 bushel U.S. crop are off the table. Yeah. And that's an important perspective.
It is.
And on corn, just to add a few more comments, basically the way I like to think about it is that, all the lights are flashing green for corn if it weren't for the concerns about trade.
Yeah.
Like you've indicated, we've built a strong demand base. We've substantially reduced the acreage base in the U.S. Again, how optimistic you are right now depends on what you think the true trend yield is for corn. We can argue about that for hours.
and will.
and people will.
Yeah.
But it just now we're kind of waking up and seeing that that market, it has almost no margin for any production problem. So I think the market's going to go through a process of building in a weather premium that probably most people didn't think was necessary before the reports came out. So I think we're going to have a change in mentality there on corn. And I think the markets, so we're having lower acreage. And now this is my own personal view, and it's definitely based on politics. The market's going to probably have to also reassess risks on the ethanol side of the balance sheet, because we're seeing really strong ethanol exports. And my own personal view is when all is said and done, all the shouting, all the screaming, everything going on in Washington, D.C. about the RFS, absolutely nothing is going to change. Or any changes will be so small that they'll have no discernible impact in the corn balance sheet. And I think that the trade is probably a little behind the curve on that front. So you see, all the pieces to me, Todd, are there for finally some real strength in corn prices as we look forward to 18-19. And it's basically a question of the magnitude of that strength.
Yeah, I'm really optimistic on corn prices. I have been for a while, but now with this acreage number, we've really got the potential to see something rally. Yeah, I agree with the weather premium this summer building. When you're thinking about marketing corn, new crop corn, I'm in no rush to market new crop corn right now.
I'm the same way.
I think we could sit on this for a while, see what June and July does. Soybeans, I'm cautiously optimistic, but if we could see some acreage growth and sort of weakening in demand in soybeans, at this rally we saw yesterday in the November contract, I still think, there's a place for pricing some new crop soybeans right now. Maybe as we move through the year, I would like producers to keep in mind this idea of the possibility of acreage expansion a little bit and pay attention to our demand numbers, the crush and the export numbers, because it's going to be key what we carry out in 17, 18 and what kind of yield numbers we get out of this crop and in final acreage numbers. So I still feel, if you're at 10.15, 10.20, that's not a bad soybean price. If you're holding out for $12 beans, you might be waiting a long time. So,
I think our view would be that will take production problems in the U.S. You have to forecast that to get those kind of price levels.
Yeah. So no, it was actually, other than the stocks, it was a really optimistic report for both crops.
All right. Well, we want to get to our Q&A time here and get to everyone's questions if we can. So why don't we start with the top one is what is the track record of USDA report versus actual over time? I'll let you, we had a slide on that for corn and soybeans. And I think that's an important point to reemphasize, Todd.
It is.
That those numbers can and do and have in the past changed a lot, particularly on soybeans. So why don't you review those again?
Yeah, and soybeans, we see, over the last couple of years, we've seen an expansion of soybean acreage where we had 1.46 in 2016. And there's been years when they've gone down substantially. There's a lot of volatility from the March prospective planning to what the final acreage number is in soybeans. And it really does depend on weather, right? If we can get out in the fields early, if people plant more corn, or we don't see a problem with winter wheat acreage and there's not a substitution effect, or the spring wheat acreage gets in on time. So in particular, soybean shows a lot of volatility in this final number. So how accurate are they? I think they do the best they can, but things change between March and June, and we see a lot of variability.
Yeah, and so if you look at that chart carefully, and we've looked at this over time, there's no statistically significant bias in either direction without having knowledge of weather in advance. So you have to take the prospective planting numbers as the benchmark now. We expect them to change, but we don't have a very good ability to predict which direction.
No, you have to accept the numbers. It's the best numbers we have.
Now, just one small comment on the grain stocks reports. We've spent a lot of time digging into those, and there's just, I would put it this way, sampling variability in those numbers, particularly from the on-farm stocks estimates. So that's why, rather than dropping feed and residual use for corn by 180 million bushels, we fade that number to 100 million bushels because we've learned that while the numbers are bearish so far for the first half of the marketing year, there's a lot of volatility in the stocks numbers versus what market expects right up to September 30th. Right up to September 30th. So, it's very possible that we could get, particularly with the livestock numbers that we know are out there, we could still have a couple of bullish surprises on the implied usage in June and September. And that's why we don't just kind of follow those surprises on the stocks reports slavishly. You have to fade them a little bit because that there's the possibility of some surprises as we get through the rest of the marketing year.
Yeah, we faded them. We take the numbers, we use them. We did fade at 100 million. We took 100 million off. You have to take the numbers that they present, but we didn't take 200 million bushels off, right? So,
and we don't know. We think the USDA, when they come out with their next WASDE, will be in that range. They tend to be a little conservative, so I wouldn't be surprised if they take it down 75 to 80 million instead of 100. So let's move on to our next question. Why don't you take that one on? Where did all those corn and soybean acres go in Minnesota?
Well, Minnesota lost principal crop. They lost 162,000 of principal crop acres, and they planted quite a bit more, 440,000 more acres of spring wheat in Minnesota. So where did Minnesota's corn and soybean acres go? Some of them just left, and another chunk went into spring wheat, is what it looks like.
Okay. What was the key motivating factor for the selection of the quadratic trend to predict expected soybean yield as opposed to a linear trend? And I'll add a comment here. And it does matter. That's a good question.
It does.
And it matters to the soybean balance sheet. What seems to probably a lot of people an obscure question, a linear trend versus a quadratic.
It's a huge difference.
But it makes, easily a bushel and a half to 2 bushels difference in the yield that you project. And it is an interesting question, and let Todd
Well,
answer that.
I'm going to plug FarmDoc and FarmDoc Daily here. There's a series of reports on soybean yields that we did earlier last year that culminated in this idea of, in the short run, I think, using a quadratic trend. And it has to do with, when you look at the major Corn Belt states, the trend in soybean yields still fits linear. But when you get in the Mid-South and the Southeast, their soybean yield trends are highly quadratic and significant. So you've seen massive increases in yields in the Mid-South in particular. So places like Mississippi and Arkansas and Tennessee. And I think when we see these huge national yield numbers, you'd have to think of it sort of state by state, region by region. And right now, that quadratic number is more accurate based on what's going on in the South with soybean yields. Now, I'm not going to get deep into the details of their production changes in the Southeast and especially the Mid-South and how they've gone to a different kind of soybean and planting earlier. And there's a lot there on the FarmDoc website, on the papers written, and Scott's IFAS presentation that he did this year gives a detailed analysis of what's going on in the Mid-South. So why do we use a quadratic? Basically, this change in yield numbers, what we've seen in the South. Will we still use a quadratic 3 years from now? Nah, I'm not so sure. Right. So
no, I agree. It's something that you want. We don't expect the South to continue increasing their soybean yields as much as they have the last decade going forward. So we are going to be watching closely for that point where we need to go back to a linear trend. We expect that at some point we will need to do that.
Yep.
Well, why don't we head to the next question? We talked about, there was a commenter here said it's hard to get real bullish soybeans with carryout still well over 500 million bushels and the possibility that acres will grow too. And I think that's exactly what you said.
Yeah, I agree with that comment.
Yes, we agree with that. Says this premium of soybean futures over spring wheat futures is now higher than this time last year when it resulted in 11 million spring wheat acres. How much downside do you expect for spring wheat? Interesting question, given the snow in Dakotas right now.
Yeah, we'll have to see what the spring wheat acreage actually is. I think there is some downside to that. Winter's hanging around up there quite a while. Now, I'm not sure they mean downside in acreage or downside in prices. Spring wheat prices took a hit yesterday when this report came out on this massive acreage expansion. If you're thinking acreage, I think you might have to see some acreage come out of that 1.6 million. I'd see more probably the acreage coming down. If it doesn't, I think you'll see pressure on spring wheat prices because that's a massive expansion in production, depending on what the yield's going to be.
All right, it says your analysis on 2018, 2019 is primarily U.S. based. Have you looked at it from a world perspective as the USDA has traditionally taken a look? So why don't you?
Yeah, I mean, I look at the
Todd.
world all the time. They tend to take a lot of our stuff. So I'll start with soybeans. Right now in 2018, the 2017-18 crop in soybeans, it looks like we're going to lose about 17 million metric tons out of Argentina's soybean production and an expansion in Brazilian soybean production. And it looks like anywhere from 2 to 4 million metric tons are possible. I'd say it's probably more like 1 to 2, but you never know that they're still harvesting in Brazil. Their export numbers have gone up a couple 100 million bushels as we move through this market year from Brazil. South America, Argentina exports meal and oil, they're crushers. Brazil exports beans, and they crush some. You know, we've seen strong demand from China, but as we move through 2017-18, we saw much stronger exports from Brazil through the late fall and winter months than we normally do because they had such massive crops last year. Argentina and Brazil both carried in a large amount of soybeans, I think about 1.2 to 1.3 billion bushels. So the hit in Argentina, where you've seen this strength in soybean meal prices and crush, that's a real thing. Will they just import it from Brazil, crush at the same level they're projected? I think that's a possibility. The Chinese demand for soybeans is still growing. They still have a lot of crush capacity over there. They're still going to need U.S. soybeans. But what so far 17-18's proven is maybe they don't need as many U.S. soybeans as we've been thinking they do with these large Brazilian crops coming in. Mm-hmm. So on the world scale, yeah, I'm looking at the U.S., but that export number is where the world comes in, sort of. Where do you think their production and how competitive are we? So when I say, we look at the U.S., yes, I look at the U.S., but you can sort of encapsulate the rest of the world in that export and the use and the crush numbers too. Mm-hmm. On the corn side, there hasn't been a lot of talk about it, but the Argentinian crop is going to lose many million metric tons. Their corn crops, their soybean crop's bad, their corn crop's bad. For Brazil, it really comes down 70% of their corn crops in the second crop or the safrinha crop. They just got it in some places. They haven't others. We've seen some acreage loss possibly from corn, but they've got a lot of moisture in Brazil. We're still in early days on that. Where that corn crop comes out, it's going to have a lot to do with U.S. corn exports. The thing about the United States, we're the world's largest producer of corn by far, and we export to a lot of markets. Mexico is our big market, but Colombia, Peru, Thailand, we export a lot of places in 400 to 500 million bushel increments. So we've got corn. It's been the cheapest feed grain in the world, and prices have been relatively low. So the idea that there's strength in exports in corn is a real thing. I believe it too. It just comes down to these trade issues in a lot of ways, and that's worrisome. But
why don't we jump into that? Because I know we've gotten several questions, and it's obviously we've mentioned it. And one questioner put it this way: bottom line, what's the worst case scenario on China and Trump and tariffs? And we've got to hit that issue.
What's the worst case scenario? The worst case scenario is we get into one of these tit for tat fights where nobody backs off of it. And agriculture is one of the main targets for China to retaliate. They've already done it some with pork and ethanol and some other fruits and vegetables after the steel and aluminum tariffs. This isn't even including the intellectual property fight we're in with them. They haven't even responded to that yet. And the fact that Brazil does have a massive crop and the potential to export to China, and this time of year they normally come in anyway relative to us, it is worrisome. I think they'll still need U.S. soybeans as we move forward, but can they get away with putting a tariff on U.S. soybeans, shifting more imports to Brazil or other places, maybe like Ukraine? Yeah, I think they can. The worst case scenario is not good. I couldn't give you an actual bushel number, but it could be quite significant. So I actually don't think the worst case scenario will happen. I'm optimistic about this thing. I don't want people to get in some kind of depressionary funk about what's going to happen with trade. I think we'll figure something out. There's just too much at stake to drop the world in a trade war, I think, and I don't think we're going to push to the edge on that. So I know there's a lot of angst out there, and I feel a little bit of it, but I'm not as worried about it as other people.
And what about, the headlines are all about China and aluminum and steel and retaliatory tariffs there. Earlier, we were really worried about NAFTA withdrawal and corn.
Yeah,
where are we at that? What do you think about that, Todd?
I'm more worried about NAFTA, I think, than the China thing. Now, I don't think it's going to happen this year. We've sort of hit a lull. There's this negotiation back and forth. They levied the steel tariffs and then exempted everybody that exports steel and aluminum to us. So if that's the way we're going to do it, we can work something out, right? Yeah. Like, we're going to levy a tariff, and then everybody we trade with, we're going to exempt them from it, except for these three people. So, if that's the way we're going to do it, I'm not as worried about it, right? But if we get into this big tit for tat, Mexico does import a lot of corn from us. Canada imports some stuff. It is worrisome in some sense, but I'm not worried about it this year, to be honest with you, Scott. I think it may be a next year kind of thing if anything happens.
Okay. A couple questions that are coming in I do want to get to. Says your 18-19 average price for corn is 375. It doesn't seem aligned with your bullish bias on corn, up only 40 cents versus 17.18. Maybe I can start on that.
Go ahead.
That I think that's probably an astute observation.
Yep.
That our bias is probably that the underlying direction of the corn market is probably more bullish than that. But we tend to be conservative by nature, and we stick with the predictions of basically what we call our weak demand forecasting model. That's about what it projects. But if you backed us into a corner, I think both of us would probably think that if we can avoid the trade problems for the 18-19 marketing year, that we would be somewhat more bullish than that 375. I'll let you speak for yourself, Todd.
No, I am. When I'm doing 18-19 projections, I am conservative on the numbers, downside. But that doesn't, we're talking a seasonal average marketing year price for corn across the country, right? Illinois is usually about 5 to 10 cents more than what the seasonal average marketing price is. What there's going to be, if what comes to pass comes to pass, the idea that you're going to see corn prices well above $4, I think is a distinct possibility. And that's harvest price corn. That's moving into January. That's moving into March. I'm bullish on it, but there's some caveats to that, right? So, I am bullish on it. I am optimistic, but you don't even really have to back me in the corner. But I think, that's a little bit conservative, but I think we stick with that method this early in the year. Right.
So add my 2 bits to the conversation. My personal view is that if producers make a marketing mistake for the 18-19 marketing year, as the corn market rallies, will be making too large of new crop sales too early.
Yeah, I'm in a wait and see mode on corn prices.
Yeah, that's where I am too. Okay. Could colder weather and snow in the northern and western edges of the Corn Belt flip acres from spring wheat and corn to soybeans? Yes.
Definitely.
Yeah. I think the only question there would be magnitude. And so we'll really have to watch the weather, because right now through mid-April, the current forecasts, which are reasonably accurate out that far, are not very optimistic for getting the U.S. spring planting season rolling anywhere from North Dakota to Louisiana.
No, nobody's doing anything.
Yeah. And so that we'll have to watch really closely that development. Here's an interesting question. What are the chances of increased acres of CRP in the new farm bill?
I think there's been a lot of talk about increased CRP acres, with some pretty heavy political hitters wanting it to come to pass. So I would not be surprised if they can get a farm bill passed that we'd see higher CRP in the 30 million acre range.
I'm right in the same place. Yeah. I would be really surprised if, when all is said and done, that there isn't some expansion in CRP. It says, you didn't mention the strength of the dollar. Where is it going? And we've talked about that in the past, Todd, and you've done some work. Why don't you take that one?
Well, I think the dollar, it's been relatively weak recently, despite what we're seeing in growth. With the kind of economic growth we're going to, I think, see this year, and increased interest rates, the Federal Reserve has already raised it 250 basis points. There's a minimum of 500 basis points. There could be another 1% increase in interest rates this year. I think the dollar will strengthen. Now, having said that, when you look at export numbers for corn in particular, you can't really find a good relationship between the broad exchange rate and corn exports. It's tough to see. We export to a lot of places. Doesn't matter. I think it does, but I think it's marginal at best. the real to the dollar is a bigger deal for soybeans. Will we strengthen against the real, which makes ours less competitive in the soybean export market? I do think we'll see the dollar strengthen. I'm not sure it's as important as a lot of market observers pretend it is.
Yeah. So a question said, I thought the grain stock usage numbers were front-loaded big time year in, year out. And for corn in particular, that is correct.
Yeah.
We do observe substantially more feed and residual usage in the first half of the year than we do in the second half. We could get into a long discussion why that's true, and it has varied a lot. And so that's the key number to forecast as you move forward. Are we going to be, was the first half feed and residual implied usage, did that represent 70%, 74, 68, 64% of the total usage for the year? And then you can see you can get a huge swing in your projection based on how big that percentage is. And we take kind of a middle of the road stance on that one.
Yeah, right now, I'd say it's probably closer to 68% than anything this year. That number just seemed way out of whack to me. But yeah,
so that's it.
Yeah.
One questioner said, Scott, can you touch on some more details of what is being proposed on RFS from both sides, RIN caps versus multipliers? Gosh, could we go into another hour on that?
No.
I'm just going to give you a really short. Of course, there's an incredible amount of back and forth going on the RFS right now. One proposal, and again, direct you to FarmDoc Daily, where I've written extensively in the last 6 months on various proposals to changes to the RFS. So go look at those articles that I've written, particularly written a lot about a RIN price cap. Again, it depends, devil's always in the details. In short, a 10-cent RIN price cap would, if applied to all RINs, would devastate biodiesel. It would have a small impact in ethanol. And the latest proposals that I have seen are for a multiplier, where basically any gallons that are blended in E85 or E15 get 1.3 RINs instead of 1. And that would have a small impact because the gallons are so small. There are other different ideas out there, but in the end, I think that where I started out is we are in a political stalemate on the RFS. Neither side politically strong enough to move the ball in any direction that actually is positive from an ag perspective, and it favors biofuels if we preserve the status quo, which is where I come out when things are all said and done. Got a couple minutes left. Let's see, what are some of our other questions that we haven't had time to get to?
Yeah, we had.
Let's see. Okay, I think we've covered most of those. Said in recent years, the typical magnitude of bearish surprises in the soybean stocks estimate seems significantly greater than the magnitude of the bullish surprises. I believe that is correct, even though bearish and bullish surprises seem just as likely to occur on a year-to-year basis. A more typical pattern seems to emerge for corn stocks. Can you comment on this? So I think they're commenting, if you look at the right.
That's soybeans.
Yeah. So the blue are the bearish implied usage surprises, and the red are the bullish. And we have indeed had a pattern for the last decade in March of a dominance of bearish surprises. We want to be a little careful. There have been 1, 2, 3, 4, 5 bullish surprises, and 1, 2, 3, 4, 5, 6, 7 bearish. So there's a slight tilt there to the bearish side. It's probably the magnitude that we're reacting to.
Yeah, the magnitude.
And I don't think there's a real good explanation for that.
No, I don't either. I mean, there's a lot of sampling error in these grain stocks reports. They do a good job. It works itself out as we move through the marketing here.
All right, got 30 seconds. I'm getting the cutoff. It says, I want to answer this question. Is there anything in this report that can be considered a positive for landowners? And so we would take as an overall that report was very positive. I should be careful. It's positive for landowners. I don't want to get too carried away because it is 89 million acres of soybeans. We always got to keep that in mind. That's a huge number. But overall, the message is that modestly optimistic on price, which should be a positive for landowners.
Cash rent
and cash rents should help to support the level of land prices and rents that we've been seeing in the last year or two.
I agree. I think there's plenty of positive in that for landowners. Yeah.
So I apologize again if we didn't get to every question, but we got to almost all of them. So we really thank you all for tuning in to this webinar. And also just remind you, if you haven't gotten the slides, they're available at the farmdoc webinar. We're going to go to our final slide where you can see the slides and the video of this entire presentation, and Q&A will be available in the next day or two, where you can look at those, and so you can review the whole thing, share it with friends and family, and enjoy yourself. And we wish everyone a happy Easter weekend. Thank you.
Have a good week.